Good morning, traders. It is 8:01 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A quick rundown of the news overnight. Might have noticed some selling coming into the market overnight, but mainly sideways. Couple of reasons for that. The market's focused on Greece as Eurogroup holds its extraordinary meeting today. That meeting is scheduled to take place at 1 Central, 2 Eastern. There are hopes for a quick deal. It's believed that hopes for a quick deal will be disappointing as Greece and Germany draw battle lines. Still room for compromise before Monday's pivotal Eurogroup meeting. Ukraine's peace proposal negotiation takes place in Minsk, Belarus today. Russia diplomatic source said to see 70% chance of an agreement later today on Ukraine. So that's good news there. Greece's PM Tsipras reiterated his view that Europe needed growth, not austerity, and was committed to implementing reforms. Bailout program has brought deregulation and not real reforms to this country. All of this is coming in through tradethenews.com. MBA mortgage applications this morning at 6 a.m. Week ending February 6th came in at negative 9% versus plus 1.3% prior. Mortgage applications. Also, Fed's Fisher, hawk non-voter, reiterates view that easing inflation should not delay a rate hike. I don't see this happening. I don't see this rate hike happening at all. But we'll see. Maybe we'll get surprised. But they keep talking about this rate hike that's imminent, and it just doesn't make sense. The S&P fair value is negative 4.3, negative 4.3. That means cash is trading 4.3 points below the futures. Looking ahead, at 9:30 today, we have weekly DOE crude oil inventories. And then we're pretty much clear until 11:30 when the Eurogroup meeting holds its extraordinary meeting on Greece behind closed doors. Remember, the press conference is at 1 Central, 2 Eastern. At noon, the Treasury's to sell $24 billion in 10-year notes. And then we get 1 o'clock, we get the January monthly budget statement, expecting negative $19 billion. And that's really it until about 6 p.m. Central, 7 Eastern this evening, when we get Australia's February consumer inflation expectation, and then a half hour after that, Australian employment change. Let's take a look at what we did yesterday. Very interesting day. There we go. So overall, yesterday managed to play out as expected, except for the quick drop, the quick drop down into the value area, deep into the value area. The expectation was things changed a little bit when that happened. This was on news. Overall, we opened out of range, and the primary hypothesis is that we're likely to drop into 50, if not into 48.25, and then bounce back up and out of the range and move towards 2060. 2059 was yesterday's overnight high, which was our first target, then 2060 beyond there. What it did is it bounced off of 2050 early, back up to 2053.75, looked pretty good, and then it dropped very quickly over here, right here to 2048.25 to the tick for a 2-point rotation, and then it basically chopped. And remember, this is a high volume node, so we do expect chop, and that's what we get. We chopped around for a pushback into the opening swing, which failed to bring us back down, bring us through to the other side. And then news came out at 9:45 Central which dropped the market down to its low at 43.25. It stopped 3 ticks ahead of the gap close. Once it failed to take out the mid and continue higher, I changed my view to the possibility that it would get to value low, the gap, the value low, and the overnight high first. At this point, it had not taken out the overnight stat. So, and if none of this makes sense to you, it's okay. Hang in there, and it'll start to make sense over time. I may be speaking too quickly for some of you, I'm not sure. So anyway, so we get the bounce on the news bounce. You could see the news as it came out here affecting multiple assets across the board. Right here, let's go to 9:45. This is a 15-second chart, so there's a lot of data here. But overall, I know it's news when I see this sort of reaction right here. When you look at, when I put the cursor right here, and you can see that multiple indices drop all at the same time. Gold took a pop higher. It tells me that there's news and there's a high probability of returning to the scene of the crime. I've talked about that a lot in the past, in the last few years. And that's what we did. We came right back towards where we were in the 2050 and then resumed our auction higher. So essentially, everything that happened between about 9:30 to about 10:30 or so was basically outside of the normal auction, and the auction resumed, and then we finally continued to push higher as expected. So that's where we ended up. We ended up pushing to 66.50. 68 is the last day session high in this area. I expected the market to actually float up there overnight, but overnight it has not done anything. This is a very odd end of day point of control shift here right at the close. Right at the cash close, we get a lot of trading taking place at 20.63 shifting the point of control from down here down to 20.52 up to 20.63 pushing our value higher. So we have a value reversal here yesterday. So my expectation is that we continue higher. The market's indicating that that higher prices are being accepted as there's a lot of trading going on. This is the overnight session. So here we closed near the highs on a high point of control. Point of control is outside of the prior day's range, reversing this this point of control drop here. Balance, and then we're back up, and then overnight we basically just trickled down into this 57.25, 57.50 area, these double tops that we had yesterday, and has taken back the thin profile zone overnight. So this morning, the expectation based on that, the expectation is that we would open in value in range. So here we are. We're likely to open in value in range. This is quite compressed. So right now we're trading at 20.60, the overnight point of control. Again, it's a very sharp looking profile overnight. The volume overnight is very low at this point. The overall volume is only 102,000 contracts. 102,000 contracts. That's very, very low. So there's very little participation on the overnight, and you can see the profile is very compressed, and that's what we're trading here. We have a double bottom, a local double bottom at 20.57.75 on the overnight. So we have a weak low, looking for that to be taken out fairly quickly. So I'm looking for a quick break lower as a primary idea. A quick push lower into this 57 area. And then I expect that buyers would step in and start to defend and go back responsive up to 20.63 and then for us to continue climbing and climbing towards that 68 high. The 68 comes from 2 days ago, comes from our Friday high 2068. Next up is 2072 and a quarter, which is this little neckline right here, 2072 and a quarter, and then 2075 comes from the composite. It's a key CLVN, and then if we take that out, then we're looking for new highs at 2088.75. Been talking about new highs for quite some time now, since the end of January. I've always looked at this as balance and a pullback, and for a continuation of the overall general trend to continue. So that's what I'm shooting for in the intermediate term. Short term, I'm looking for some balancing today with an upward skew. Okay, there's nothing here today that is really outstanding. I'm just seeing that the market's probably just going to do its normal thing and auction very slowly today. So make sure you you don't get too excited. Save your bullets today, and just relax into whatever the market does. You don't have to trade at the open. You can wait for the market to set up and then see if you can detect what directional bias the market is likely to take. In other words, our primary task when the market opens is to figure out who is dominating the trade. Is it short-term traders, or is there a higher time frame or an other time frame OTF stepping in a directional bias? And that if we detect that, then we know that our task is to trade pullbacks in that direction, assuming that context supports it. If we don't have a directional bias where we trade both ways and we chop around, we have an open auction at the open, then we're likely to have short-term traders. Short-term traders do not generally cause trends. They don't take enough inventory in the auction to cause trends. Your short-term trader probably, in that you're not able to carry a huge amount of inventory in a directional bias. So in that situation, you're looking for short bursts for trades, short targets, and probably a mean reverting type of style. So our first task when the market opens is to determine who is likely to be in control, and the clues to that are where we open, what do we test, what high do we put in first, what low do we put in first that establishes our opening swing, and how do we treat those market on open orders going forward? Does anybody step in to take a direction, or is it short-term traders banging each other, clubbing each other on the head like a whack-a-mole? So that's once we determine that, it becomes easier to apply our plan for the day. And once the market starts to release itself in the direction of a plan, it's just a function of finding a decent area to enter with a good risk reward, and then take the trade and let it go. I know all of that sounds like it's complicated. It's actually pretty simple, but it's not easy. Don't mistake me saying simple with easy. It's not easy, but it is simple. Trading is simple. It is not easy. Okay. This is the Euro Stoxx. The Euro Stoxx again continuing their balance. I've been talking about the Euro Stoxx being in balance for quite some time. We're still snaking around this 33.63, which has moved up to 65 now. We're still accepting this balance. We have a two-pronged profile here. If I change the color on it, let's make it a shaded. Let's make it a nice blue. You can see the two-pronged a double distribution profile here. We're trading in the middle of it. There's not much here. I mean, as we move into the upper distribution, we find sellers. As we move into the lower distribution, we find buyers on initial tests. Just be patient with this. It's a market that's consolidating and is building energy for the next move. And of course, with the Euro Group meeting today, we expect some sort of a break on this product. The Eurogroup meeting is taking place after the cash closes in Europe, so the participation on whatever's released this afternoon from that Eurogroup meeting may not be very strong, but expect some pretty healthy movement tomorrow morning if the news is not what the market expected. I won't get into crude today. It hasn't really done much. It's following the pattern that was expected. It is back at 49.18. Remember yesterday I said that this is expected to pull back down to 49.12, and it did so this morning. The low for crude this morning is 49.15, missed it by 3 ticks. And it's done what it's supposed to do here. Finally, it's been trending up. It's been a bizarre trend as it pushes up, despite this clear rejection of higher prices. This is an extreme high here, and I'd said that I expect this extreme high to last at least in the intermediate term, meaning a week or so. And it did. It pushed all the way up to 43.99 and has found sellers back into balance, which is exactly what I was mentioning yesterday. So it's nice to see it come back to a non-interventionist auction. It seems over the last few days, though, in crude, there was some underlying news or something going on underneath the surface that's causing this to one time frame up, and that ended yesterday. So the expectation for crude is that it would test out its balance zone with its profile being super hyper fat here, and a heavy balance area. So look for short-term template day type trades, meaning look for short-term targets. The next one down is 48.44 to trade off of, is what I would suggest. Anyway, I'll leave you with that. Thanks for listening in. My time is up. Good luck today, and I'll talk to you tomorrow. Take care.